Well, thank you for being here, Roland Hill, Managing Director of FYI Resources, which is a very memorable name.
It is.
You've been here at the Edelmetallmesse with us, 2018 actually, for the first time. I remember. At the time, you were following that concept of a niche commodity, not even a commodity, chemical ingredient, I call it, high purity alumina. At the time, it was more or less a concept, an idea. There were a number of companies following that, and here we are 4 years later, and you've made quite remarkable steps forward, and that's what we're here to talk about. So, again, welcome, and just give us a high-level rundown on what are the steps that lay behind you since 2019 to now.
Exactly. Well, thanks, and good to be here. So yeah, 2018, 2019, it was a concept. We've come a long way since then. We've taken it from a dream to virtually reality. We've over that time, we've spent all that effort and money into the R&D of this particular product. It's a fantastic new age critical mineral, and I think the strength of our development is now starting to be revealed through our development program. So since 2018 or 19, we did what we said we were going to do. We produced our DFS. In fact, we produced 2 DFSs under 2 different stages. On the strength of that, then we went into pilot plant and development of our product, and then ultimately attracted what we see as being a Tier 1 partner in Alcoa. Alcoa of Australia, to be precise. Signing a term sheet in 2019, we've been on a development pathway to commercialise this product, and I think the strength of the product and our strategy is reliant under the underlying DFS. Very strong economics, unbelievable process and the flow sheet, and now with the combination of FYI and its agility and I suppose with Alcoa and the strength of their balance sheet, their partnership, their operating ability, we think we've got an unbelievably good collaboration and combination. So,
I think one of the major challenges has been that HPA hasn't been understood, and probably is still not well known, really. What I learned in talking to you over the years is really that alumina, that's what it is, it's aluminium oxide, yep, is plentiful. It's a commodity, and Alcoa sells millions of tons of it every year. The trick really is to get it pure, yep, and that's being done by the conventional route. Yep. And I think the new thing, obviously, that you brought up as a concept at the time was to go not to start from bauxite, which is the raw material that aluminium is produced out, but to start with a kaolin deposit. Yep. So that was the new path, and I think it's really important to remind our listeners and viewers that how this started with Alcoa coming to your pilot plant in 2019, and what happened then along.
Yeah, well, that's right. So 2018, 2019, it was just a product. What I'd like to make sure and make clear to the audience is that what differentiates us is the purity of the grade, number one. Number two, I think, is the source that it comes from, and as you quite rightly pointed out, the original feedstock is kaolin. So number three, I think, is the cost benefit of this. So to be clear, we're not making SGA or smelter grade alumina. This is high purity alumina to a grade of 99.99%. Pretty difficult to do, but we've demonstrated that we can do that. But the process in itself is a fraction of the cost of both capital and operating cost compared to making smelter grade alumina. So we're a completely different product to what Alcoa normally makes, but having said that, they do have skills and abilities and the balance sheet and the resources to be able to help deliver this commercially.
So would you agree it's a good way of putting it that this represents the high-end, high-margin part of the alumina business, basically?
Absolutely, and that's really what our objective is. We don't necessarily want to go and make a commodity like smelter grade. We're distinguishing ourselves in the market by the purity, and the purity itself attracts a premium in the market. Smelter grade alumina sells for somewhere between $1,500, $1,600 US to $2,000 US a tonne. The high purity alumina that we're targeting sells for approximately $25,000 to $35,000 US a tonne, and higher grade attracts a higher premium. So 4.9 is that mark that I just mentioned, but a 5 grade 5N is much higher. Yeah.
Well, to me, it's like really you're taking it's a stepping milestone-driven process, put it this way. You started with pilot plant, let's say you put $4 million in at the time. Next step should really be scheduled, should be a demonstration plant to the tune of $50 million US, I guess. And then ultimately you're looking to build in a joint venture, obviously then with Alcoa, 65-35 joint venture, a full-blown plant with 10,000 tons, say, right? Is that
well, in essence, yes. So we have a very defined development program through the engineering process that Alcoa's laid out. It's taken a little bit longer than we'd expect under FYI, but the strength of that is that the detailed work and the de-risking that's going through this process is absolutely ensuring the success of the project. So what we're hoping to do, as you said, is have an interim step for development. We've completed our pilot plant, and that's a big verification and demonstration. Next step is the demonstration plant. We hope to do that, commence that early next year, 2023, and sizing of that, we're hoping to be around about 200 to 400 tonnes per annum. Average output, and the purpose of that is really, as I said, to de-risk the commercial plant and the rest of the process flow sheet, but also to generate marketing material for our assessment by our potential customers. And then for the commercial plant, depending on how things look, but there's certainly towards 10,000 tonnes per annum. Yep.
Talking about customers, really, you've obviously been traveling a lot. You presented test material to key players, and obviously they like it, but they seem to need more confidence to gain more confidence and get it from a demonstration plant actually.
Yeah, no, it's a good assessment. Yeah, so we have an ongoing engagement with our customers or potential customers in producing material for their assessment. We've been very active of that since we've started production of the pilot plant. It has been received very, very well in terms of the purity, the quality, and all the physical characteristics, very much so. But yeah, certainly the strength of doing a demonstration plant and providing more material, number one, and probably a little bit more proximate to the commercial plant material, so that they can have a higher level of confidence in that material. So yes, it's a very important stage, and something that we see as critical, and we certainly have the support from our customers that we have been talking to over the last couple of years.
From customers, it's about applications as well. I think that has also evolved quite a bit over the past 4 years. What can you tell us about applications?
Yeah, very important. Obviously, the reason why we're making this is to sell it to customers. We see the customer based, broadly speaking, split into two groups. One's a sapphire glass market, which is LEDs, etc., and number two is probably the higher growth but smaller at this stage, is the e-mobility, so into electric vehicles and the batteries. And the purpose in that case is as a ceramic coating on the separator between the anode and cathode to increase serviceability of that battery. So two broad markets, although what we are seeing is that other applications, boutique applications, are appearing. As the development goes on, people are becoming aware that this stuff is material and available, and then we're addressing other markets as well.
To close this up, obviously, I'd like to remind people, 4 years ago, the company was trading, I think, at 4 cents, something like that. Really, as I said, just a concept. With the advent of the joint development agreement with Alcoa, I think you traded up as high as 80 cents. Then somewhat of a kind of a, let's say, typical, let's say, setback happened when people realized it's not a full joint venture yet, and what is actually the involvement of Alcoa. But what can you say without saying too much?
Thank you. Look, all I can say is that, 4 years ago at 4 cents, I was very confident about where this strategy was going to head. I think today, 4 years later, with the advent of Alcoa and the development that we've made, I'm more than confident now than I was previously, even though the share price is up. The share price is not a reflection of the value. There is no relationship whatsoever. I think a good reference is our NPV that we published in the market for our DFS back in 2021. And really, I think our whole development is based around very precise, very deliberate delivery of the strategy, but de-risking it as well. So the key thing is the project. Yes, it's a bit unfortunate the share price has retracted back, but I think that's probably where our value sits. And we'll get back there through this process.
Last question. Everybody obviously wants to know whether there's the financing coming up or the funding side of things as well, how that plays out.
Yeah, so we're fully funded. I think it's very important to say that corporately we hold in our treasury over 2 years worth of cash flow on our books at the moment, so we're not expecting to raise money corporately, and certainly for the project development under our terms of the joint venture that we're developing to. Alcoa is largely responsible for most of that capital, so right now we're fully funded and quite adequately funded for both corporate and project.
So in the advent of a joint venture, you would carry 35% and Alcoa would own 65%, and for putting in, I think they were committing to $240 million US.
Correct.
For a full plant. Yep. Based on milestones, including a demonstration plan.
Yep.
I think that's pretty much summing it up nicely. I look forward to seeing news and continuing to follow the story. Exactly. Very exciting, and eventually hoping personally that it might become a nice stream of dividends at some point.
Yeah,
maybe not in the next 2 years, but beyond that.
Exactly. So look, we're looking forward to a very busy next 12 months, and I'll be happy to come here same time next year and tell you the progress that we're having. So it's very exciting for us. Yep.
Thank you, Roland.
Thank you very much.
Thanks for taking the time. Thank you. Bye-bye.